What's all this business about Goldbach levels?
Do you want to be able to trade explosive news cycles using mathematics for incredible returns on your trading? In this video, I'm going to show you how. So this morning on GBP USD, we had an explosive move that was predicted by my group. So if you have a look at the economic calendar for today, for GBP, we had the claimant count at 2 o'clock. And this was all predicted by the algorithm using GoBack. And I'm going to show you how right now. So let's run through the price action. If we go back to 2 a.m. when the news came out, all right, that's the news. And then we use the replay tool to get back to that price action. So I can show you exactly how you could have traded this. There we go. So we looked bearish on the day and we know we had news coming up, right? Now, as you know, I use GoBack for my trading, and GoBack is the mathematics that prices every single market, from Forex to crypto, index futures, gold, silver, oil, stocks. Everything is priced via GoBack. Now, if you would like an introduction to GoBack, then you can click the video here. And I also have an introduction to the GoBack indicator, and you can get that by clicking here. So going back to the price action, first you have to understand which power of 3 the algorithm is running on. Now, given that I have studied this for years, I can tell by the volatility of the candles which power of 3 the algorithm is running on. Now, if you would like some more in-depth explanation on GoBack, there's a link to Hoppy's official GoBack book in the description to this video. And if you would like to learn my time and price golden bullet strategy, there's a limited number of mentorship places available. So opening up the indicator, I know based off the volatility of the candles, GoBack is currently running on the 81 power of 3. So let's break down this move. And a lot of the moves, when it comes to the 81 power of 3, typically happen on the 5-minute time frame when it comes to high impact news. So let's see what happened, right? What did the price action give us? So yesterday, or let's just give you a quick refresher on GoBack. So GoBack defines what the dealing ranges are using mathematics. And these are all predetermined before price action even starts. So when price is anywhere between this line and this line, this will be the low of the dealing range. This will be the high. This will be equilibrium. And it also tells you where the PD arrays will form. The rejection block will form here, the order block, the fair value gap, liquidity void, breaker, mitigation block, all the way to equilibrium. And then we reverse them, mitigation block, bearish breaker, bearish liquidity void, bearish fair value gap, bearish OB, and then the high of the range. So what did the algorithm do? What were the telltale signs? No wick is random. Can you see what it did here? It wicked down in order to produce liquidity just below the dealing range, because it needed some stops, some sell stops here. So a lot of people would have placed their stop loss here for longs. Okay, and as this fake trend continued, more and more sell stops would have accumulated here until news hit. So as soon as we had this sweep of liquidity here into the low of the dealing range, and knowing that we had high impact news about to hit, then we had to wait for GoBack to tip his hand. And the algorithm I like to share publicly, because it's the easiest to understand, is algorithm 2. Now, algo 2 typically goes from the low of the dealing range up to the breaker. It retraces to the fair value gap, and then the terminus would be at the opposing order block. Now, I'm pretty flexible. I don't mind it retracing from anywhere above this zone here. So whether it retraces from the liquidity void or the breaker, I'm pretty agnostic to that because they are both high probability setups. So as our high impact news hit at 2 a.m., we had to see telltale signs of algorithm 2. Okay. Now let's see. Let's play back the candle slowly. So there was your raid of liquidity. Okay, so it's quite a deep sweep now into the low of the dealing range. This would have taken out all those sell stops, the people who got into the trade early. Right, we don't come in until we have the retrace to the fair value gap. Now, it's not any fair value gap that we care about. It's the fair value gap that is created in the fair value gap partition. These are the true fair value gaps, right? So we don't get tricked into coming into any other positions. So playing the candles through, we're just waiting for that fair value gap. This is why it's important to be a patient Goldbach trader. There we go. So what do we have now? This is the fair value gap partition, and here is your fair value gap. We are already in the liquidity void. So what are we expecting? We are expecting a retrace into this level, and then we can pull our trigger. So I like to put on limit orders. They are the most accurate. So my limit order was here, my stop below the low, and where would we take it off? What does ICT tell us? It tells us you want to buy in a discount and sell in a premium. However, he doesn't explain what a dealing range is. So you don't know where the premium is and where the discount is. Goldbach tells you where the discount and the premium of the dealing range is. So all we have to do is take off our trade at the first opportunity in a premium. Now, what do we have here? Conveniently, liquidity was created right at equilibrium. See? So we can take it off right there. Now, what would this have given us? A nice 4R trade. So there's our fair value gap. In the fair value gap partition, our stop loss underneath the swing low. We've had our rate of liquidity. So everybody who was prematurely positioned has been taken out of the trade. And this is where time and price aligns. So we're not tapped in yet. There we go. That's more accurate. Tapped into the trade and immediately it takes off. This is why I don't like market entries. You will get slipped. Trust the Goldbach partitions. Add your limit orders and you had no drawdown. In and out. Now you need to be patient. So what does the algorithm do now? It is creating liquidity again below our profit target, which is equilibrium. There's no need to panic. There's no need to take partials. We just trust the algo. And everyone who was short has just been taken out. There you go. TP hit, and then price starts to decline. And let's see where it got to. There we go. These are the live candles now. Do you now understand the power of Goldbach? And do you understand why ICT denies its existence? Such an easy trade. 2 o'clock was the high impact news. We had the sweep of liquidity into the low of the dealing range. So everyone has had their premature long positions liquidated. And then we know exactly where the correct fair value gap is. We position ourselves for explosive moves. So within an hour, you would have got a 4R trade. If you would like to learn my time and price golden bullet strategy, which I trade for Forex, crypto, index futures, metals, and oil. There's a link in the description below.